Good morning, traders. It is Thursday, the 7th of May, 2015, 8 a.m. Chicago time. Thanks for joining me. As always, derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A quick run of the overnight news. I'm going to try to make this as short as possible. Today's session. The key thing to watch out for in the future space right now is the rapid movement lower of the German 10-year futures, the German Bunds. They have the yield on them has the drop over the last couple of weeks has been an all-time record. And they continue to slide lower, pushing German yields higher. I think yields are around 0.6% or so. This is weighing on European equities because borrowing costs are increasing, but the Euro-US dollar pair is benefiting from this drop, and it's been trending up. I'm going to show you a chart of that, but essentially what the German Bund did, despite the QE from the ECB that was announced earlier in the year, the German Bund has basically dropped back to December prices, basically what it has attained over 4 months in higher Bund prices or lower yields, and gave them back in about a week and a half or 2 weeks. So there's something going on there. There's speculation as to what it is. That the market's one-sided. Also, several big players in the interest rate market space are saying that the interest rate bubble, is over. So I don't know how that carries over, but it certainly has helped us sell off over the last few days. UK elections today are causing the British pound pairs to see selling pressure. Looks like Cameron's party still has the lead, but has to work out a coalition government to rule that country. About 33 million UK residents are voting today. Fed's Yellen yesterday commented that the stock market prices are quite high. Her comment caused a cascading drop in equities. This slide continued into the European session. This is a news-based slide, so as I warned yesterday in the S5 chat room, look for return to the scene of the crime here, and that's what we're looking for. We got a little pop back up early on after that, but overall the market is on a pullback, as I'd anticipated and talked about on DTR, daytradingradio.com on Monday. Also, we got lower ADP, which did not help. So the market's kind of nervous with these non-farm payrolls and unemployment numbers for tomorrow. Very big thing to watch. Initial claims this morning came in at 265,000, much better than 278,000 expected. Continuing claims came in at 2.23 million, better than 2.27 million expected. Looking ahead, we have EI and natural gas at 9:30 Central, expecting 74 billion cubic feet, and then consumer credit, which is a low tier number, at 2 Central, expecting 15.75 billion. Again, keep an ear out for the UK elections and any Fed speak. Fed's Evans came out this morning and said something that I thought was kind of peculiar. He said, we'll be looking at data going forward, as if they haven't been. Expects U.S. economy to rebound in Q2. I wasn't aware that the U.S. economy was in a slump with markets pushing all-time highs just a week ago. So it's just very odd there. But we'll keep listening in. I expect Fed speakers to come out one after the other going forward. Anyway, tomorrow, Bank of Japan's April minutes, U.S. non-farm payrolls, unemployment, ECB Constancio, Swiss National Bank President's Jordan, and that's what we're looking for tomorrow. So today is probably a typical pre um, pre NFP trade. So a couple things to look out for, which I'll go over here in a second. Let's look at what we did yesterday real quick. The expectation yesterday on Hypo 1 is a strong potential for responsive selling on the open. Looking for 2084, a test. Overall, the market is pretty heavy, expecting 2096, 2097 to cap the market. Actually, 95 quarter to 97, but mostly expecting lower. And I explained yesterday that the low we put in on Tuesday was pretty weak with a point of control against the low. The expectations for a lower low, even though the overnight session didn't do that. The overnight session showed strength, showed a double top and a double bottom, and I talked about the double bottom being the higher probability. So we dropped yesterday again, had a pretty decent range of about 33, 32 points or something. It was a fairly volatile trade, but overall the market's pulled back to where? It's pulled back to the last non-farm payroll, scene of the crime. Remember, I told you I note these levels, FOMC, NFP. I note these levels and I look at how the market trades around them. But we've pulled back essentially to where we were for last month's non-farm payrolls. The scene of the crime there was 2059.75 with a low of 2049. So we're back there. Overall, if we look at the big picture, what have we accomplished? Despite this selling and this frenzy to get short and doomsday and all that stuff, we see this so repetitively. And it's just amazing that the media continues to play the same thing over and over and over. As soon as the market drops, they have every bear guru coming out telling us how the world's coming to an end. But since we have these composite charts and we can see for ourselves where the market is, what has the market done? Nothing. It is still in balance, believe it or not. We've pushed new highs, but overall we've pulled back, made a lower high, much like we did here 2010, pulled back, made a lower high, higher low, lower high, higher low, and then we broke out of this triangle that we formed in March and April, February, March, and April to the upside. And now we're doing the same thing. So until we get below 55 and so on, I don't expect there to be a cascade of selling yet. The market overall, if we back up and look at where we are in the big picture, we've hardly sold off. Look at this thing, pretty strong going back to October of 2013. There really isn't too much to worry about as far as this being the sell-off or the rollover. I'm not seeing that at all. I have to look at the charts objectively and determine what I'm going to do based on that. And based on that, we're still in balance. The point of control for this balance zone shifted from 95 and a quarter, 95 half. It shifted up to 2100 even now. So that's the key level to be tested from below, key resistance right now. And something to keep an eye on. So that's where we are. If we look at the overnight session, very noisy session, fairly wide swings, pretty good volume. The overnight session showed us 312,000 contracts, 314,000 contracts so far traded, and with a really decent range, 20 points. So there's some activity going on. Obviously, again, the Bund and the European markets are jittering around. Greece is still in play. The UK is in play today. German yields are in play. So there's plenty to price in and reprice, especially after the sell-off yesterday. So overall, the overnight profile is telling us to keep an eye on 2066, 2067. It's a fairly decent low, fairly weak high. The expectation is for a push higher. So this morning on the primary hypo, I'm looking for the market to be responsive higher. I'm looking for 2077.50 to be broken, and I'm looking for the market to re-enter 2081 and start moving back up towards 83 and a quarter. Remember that 83 and a quarter key monthly LVN. I showed it in the last two trader bites. And it's we've come down to it. We bounced around it. We put a point of control at it. We've broken below it, tested it from below, moved away, and now we're likely to test it from below again. I think today we're likely to see sellers take a break, and for the market to either enter into chop or for buyers to see these prices as reasonable and step back in as they did at the end of the session yesterday. So that's what I'm looking for on the primary hypo. I'm already 10 minutes in. I said I'd keep it short, but I want to make sure that I show you what's happened here just as a global trader, just so you know what's happening, because all of the markets are tied together. The Bund low this morning was 51.44. 51.44 was last seen back in December. And so December, January, February, March, April, up to April 17th, and then boom, the yields just drop really quickly. And that's fairly unusual. And of course, it is a record drop for the Bund in its 25-year history, or over the past 25 years. It's a record drop, and it does deserve your attention. This kind of movement in such a large product, I mean, we're talking about the German interest rate product here, it does deserve your attention. So keep an eye on that. That's fairly unusual movement there. But they're saying it's moving on no news, but we know better than that. We know that news travels to other traders before it travels to the public. So I'm keeping a very close eye on that. The Euro stocks also responding by pushing back. The Euro stocks made it back to the 3,500 that we talked about 2 days ago. Back to the 3,500 and is snaking around it and is trading in that area. So the Eurostoxx auction is playing very reasonably. The expectation is for this to come back up and retest the point of control back up at 36.30 before further moves down. Anyway, I'll leave you with that. Good luck today, and I'll catch you tomorrow. Take care. Oh, by the way, the video for last Friday was released. I put it on Twitter. It's going to repeatedly remind you of that today, but the video is available on my site, futurestrader71.com. Good luck.